Hello traders, I welcome you into the channel and I welcome you into this new technical analysis in the Forex market, commodities and also some of the indices. We will finish also with a very fast approach on Bitcoin, so stay tuned. For now, let's start with the Dixie, the captain of the ship. I have a couple of charts to share with you. Let's start with the captain of the ship as always. And we have a couple of other instruments or other Forex pairs to cover for today. We have also the German DAX and the SPX500, crude oil, gold, the 10 years bonds, and also Bitcoin to finish this sequence for today. Now for the Dixie, we have, as you can see, we have the weekly fractal support at 103.99. After a violation of this daily fractal support last week at 104.80, we saw the very strong move to the downside, and we are now threatening these lows, the previous weekly fractal support. This level is crucial for the Dixie. As we can see previously, the market has been reacting very well to this pressure support level, capable to recover the moving average, which was, as you can see, the market threatening the breakout of the moving average multiple times and being capable to recover. It can happen again, but usually, and I admit many traders will be at this point tracking the possible move to the upside, but I always prefer to track specific patterns in the market. So in this case, I have a specific symmetrical pattern, a three-wave swing to the downside projected at 127% Fibonacci level that completes the default ABCD pattern. We need the 127% Fibonacci extension level in order to complete that sequence. If the price fails the 127, there's no ABCD pattern, okay? And actually the market can extend towards the 161 to 241. So there are a couple of other variables to consider and Fibonacci ratios to consider when we talk when we approach, let's say, the ABCD pattern. The default first criteria that we need, it's the 127% Fibonacci extension of the first swing low. If that happens, we can consider the potential attempt or a bounce from this 103.32, 127% Fibonacci. Then, if the price fails, and we will be here for sure to track this possible move to the downside, if the market fails to hold these levels of potential support level, it should target the next or the previous structure support level. If that happens, we will be here, as I said, and we will track the possible alt-bat pattern, which I projected at 101.83. For now, I think it's important to consider not only the violation of this eventual support, or the eventual violation of this support, but also the formation of the ABCD pattern at 103.32. Let's move forward and let's also approach the Norwegian krone, and for this one I need to go into a lower time frame because we have already some studies done for the pair. Norwegian krone, nice ascending parallel channel. We have a bearish scrap pattern projected a few points above the recent highs, the golden Fibonacci extension level 10.88, so which requires, of course, a new higher high on price above this daily fractal. If that patterns confirm, we may expect potential or the retracement back to the 38% Fibonacci level, which implies basically a retest of this previous weekly fractal resistance on the Norwegian krone. The Mexican peso, nothing to report for now, except that we keep the expectation for the ABCD pattern, the symmetrical ABCD pattern, projected at 1745. This is a few points below the default criteria, the requirement to complete the pattern. As I said, the 127% Fibonacci extension, which is projected at 1753. We have the 1745, we have the few points below, we have the symmetrical completion point for the Mexican peso, symmetrical ABCD pattern. Then we have the euro versus the dollar, and this is a very specific pattern. Of course, we are considering the potential cup and handle pattern formation. In order to unfold into this sequence, we need to see a pullback in order to form the handle. If the market forms the handle, we should wait for a breakout, a retest of the previous resistance, and we should engage the market if the market holds above this weekly fractal resistance level. Important to consider, first of all, wait for the formation of the handle. Okay, if there's no handle, the market can trade higher and eventually be pushed lower, and we will not understand the reasons why. So I need to understand the reason why I'm engaging with the market or I get involved with the market, and for that I need the patterns to unfold. For the patterns to unfold, I need to wait for specific price moves in order to follow the sequence, you know. So I need to see the formation of this handle, and then I need to see the violation of this resistance. By the way, default targets for that pattern, as you can see, previous highs, monthly fractal resistance 111.36, 111.39, basically the previous monthly fractal resistance level. That's the default target for this cup and handle pattern formation. Now we have the Australian dollar, the Aussie. We called your attention last week for this golden Fibonacci level 67.77. Golden Fibonacci, a major Fibonacci extension, actually emerges a few points above at 67.98. The market nailed that Fibonacci level and starts to pull back. We still tracking the possible pullback to the 38% Fibonacci level, 67.16. Just a few points below the recent lows of the session, so pay attention to these 38% Fibonacci level. If for some reason the price finds some support here, it may trigger a retest of these highs, eventually unfolding into a double top or even a breakout of the previous highs and keep trading higher. Then we have also the Kiwi now approaching this previous structure low. Let me also show you on a 2 hours time frame chart this symmetrical projection for the Kiwi. We have the monthly, the weekly fractal support as a reference point, 60.46. We saw the Kiwi reacting from this support level. So just to inform, we have a symmetrical intraday pattern completed for the Kiwi, right above the previous support level. Nothing more to report rather than that. I will not be surprised to see the Kiwi starting to recover from these levels. If you pay attention, if you pay specific attention between the Kiwi, the Aussie, and the euro versus the dollar, you will see that the Kiwi was the lighter one, was not capable to break the highs from July, from the beginning of the month. And you can see both the Aussie breaking the previous highs and the euro versus the dollar, actually a nice swing to the upside above July highs. So the Kiwi was not capable to recover these previous highs and actually forced a move even lower. So I will not be surprised to see the Kiwi holding above these levels of support, trying to bounce from these levels without breaking those levels. And while the Kiwi does that, the Aussie will be pushed lower to this Fibonacci level before starting to bounce, and the euro versus dollar will also build that handle for us. By the way, and just because we decreased our time frame, we were capable to identify one eventual edge and shoulders pattern. Nice support at 108.82, acting as a neckline for this pattern. Let's change into a line chart to identify our projections for this pattern. If the market breaks below this support, we may see the 200% Fibonacci extension level, and that points roughly to the previous daily fractal resistance 108.55. So as I said, the handle may be unfolding at this point, potential edging shoulders on a lower time frame chart, nice support acting as a neckline for the euro dollar 108.82. You should target, if broken the support, we should target 108.55, previous daily fractal resistance. And actually, by the way, just to remember you, previous structure resistance and trendline resistance covering the previous highs. A retest of this structure again will not be a surprise. So basically we have some, let's say, convergence of thoughts and price zones for the euro versus the dollar. So pay attention to this price zone also for the euro dollar. A potential bounce for the kiwi will not be a surprise from these lows, and the euro and the Aussie eventually searching for this 38% Fibonacci at 67.16 as eventual levels of support. So let's track those three and let's see how they will unfold. Dollar versus the Canadian. We have also a bearish shark pattern projected at the golden Fibonacci level. We have resistance, or at least we have the new higher highs just a few points below the 136.94. So this is the golden Fibonacci extension level. That pattern usually brings the price back to the 50% Fibonacci level, which implies a move towards this major, or this not a major resistance, sorry, the intraday resistance at 136.39. So that's the equivalent to a 50% Fibonacci retracement. The completion of this pattern will favor, or may favor, that pullback for the dollar versus the Canadian. If that happens, of course, and let's approach also, by the way, or immediately, the crude oil. We discussed this pattern before. The bearish cipher pattern completed at 78.6% Fibonacci level, 84.64. I called your attention for the potential pressure from the 78.6% Fibonacci level. The completion of the cipher pattern also favors, of course, a move to the downside, not only the 78.6% Fibonacci level, but all the sequence completing the bearish cipher pattern. We were expecting that move, of course, and we are, at this point, actually, we are breaking the daily fractal support at $80.95. As we expected last week, I shared these thoughts with you. I do expect the 38% Fibonacci level to be reached at least at $80.40. This is a default target for the cipher pattern. Actually, I said last week I will be very much surprised if the price completes this perfect cipher pattern and fails to achieve the default target. So it needs to trade those levels in order to complete the full sequence. The full sequence, by the way. Let me also show you another pattern that that you should consider, and that will put the price right at the 38% Fibonacci level. We have a symmetrical projection, kind of a symmetrical ABCD pattern, just a few points below the 38% Fibonacci level. So don't get surprised that we are moving towards the 38% Fibonacci as expected. And as I said multiple times, we only fear the unknown. If you don't know how to trade the financial market, or if you don't know how to trade those patterns, don't trade them. You need to understand how those patterns react to the market, or how actually inverted, how the market reacts to those patterns, and how we react accordingly to those default expectations. So that being said, we are moving towards the 38% Fibonacci level. Also pay attention to a move towards the next Fibonacci levels, the 50% Fibonacci level, and we have also the 61.8 at $77.31. That may also complete a bullish crab pattern at 77.93. That's a golden Fibonacci extension of this last swing high. So we are talking about a deep crab pattern projected at the golden Fibonacci level. We should also pay attention to this eventual pattern if the price keeps trading even lower for the crude oil. Now let's jump into the German DAX, and this is a bold projection, as you can see. Just because you are seeing this pattern, that doesn't mean the market will unfold into this sequence, but this is something that can happen for the German DAX. I'm seeing a very critical and dramatic false or potential false breakout above this previous structure support, above this previous structure resistance in fractal at 18,674. We have a new fractal resistance, a daily fractal at 1790. That may imply, or that may suggest, let's say, an eventual false break of the resistance. And this is why I'm saying this is a bold move, because we depend on the confirmation of this false breakout of resistance. We depend on that will depend on the violation of this support. Only after confirming the violation of this support level, I will consider this as a false violation of the previous resistance level. So previous resistance, new higher high, broken support, confirmation of a fractal, of a false breakout. Okay. Usually when that happens, that will force the price, or the price tends to surge, let's say, for the golden Fibonacci extension. And the golden Fibonacci extension of a very specific move, the last one that triggers the false break. So we will expect a move, if that happens, we will expect a move below this support level towards the golden Fibonacci extension level. This is my trade to the downside if that happens, if the market breaks below. That will be my trigger to the downside, and of course if the market achieves those levels, I will pay attention to the eventual bounce and reversal from this golden Fibonacci extension level. Bold, yes, but it can be very objective if confirmed. First of all, we wait for the confirmation. We are far from that level, from this daily fractal support level, so we are far from those levels. We need to wait for them, but something to track and to consider also for the German DAX. Let's move into the American indices, and specifically into the SPX500. We have a nice ascending parallel channel. You should be aware of this already. Many traders are tracking this ascending momentum. I'm also tracking the potential. We have kind of an ascending wedge. I'm also tracking the eventual breakout above this ascending wedge. Eventually the 224% Fibonacci extension, very similar to my previous Fibonacci extension levels, exerting some pressure on the SPX500. I will also expect the same reaction or the same kind of pressure from the 224% Fibonacci extension level. Ultimately, the price will produce something similar to this previous deeper pullback, and that's something that we should consider. And eventually a retest. I will not be so bold in this one, but eventually a retest of the previous daily fractal resistance levels you should not ignore. But wait for, first of all, I will suggest you to wait for the 224% Fibonacci extension. Of course, this is one of my personal criteria, of course, but this is my suggestion. Wait for the 224% Fibonacci level, 57.24, and then we may see the retracement for the SPX500, even though very strong bullish momentum. It's very tricky to try to track these retracements. I use the Fibonacci levels. As you can see, the 113, it was my first level of potential pressure. Then we have the golden Fibonacci level, very shy momentum here, actually a sideways moving process, kind of a consolidation right here. And then the 224 will be my next one, so I need to wait for that level to exert some pressure for the indies. Then we have the dollar. I also shared this pattern before, or last week. I discussed some of the commodities on my previous videos. This was one of them. Gold, bearish shark pattern, actually a bearish crab pattern projected right at the previous highs, nailing the monthly and weekly fractal resistance with the golden Fibonacci level projected at 2450, right above this monthly fractal level. The completion of this pattern will favor a retracement. It can be so deep as a 38% Fibonacci level, 2387. That's kind of the default projection for the crab pattern on gold. We have also the 10 years. I was tracking the possible momentum to the upside, and I was tracking the possible edge and shoulders pattern formation. Usually we track these sequences at the bottom of the structure, not in the middle of the process of a bullish momentum, but sometimes the market can be tricky, and sometimes it's useful to track some of these patterns in the middle of this upside momentum. Even though I keep tracking this possible move to the upside, actually I'm expecting at some point the retest of this monthly fractal resistance at 113.12. Progressive move towards those levels again, but that's my expectation. Daily fractal resistance 111.10, now under pressure. I admit more move to the upside towards the 200% Fibonacci extension level. 88.6 also projected at 112.21, so this will be my next Fibonacci levels of pressure for the 10 years, which I expect to retest the previous monthly fractal, as I said before. Then let's finish with Bitcoin. The cryptocurrency finds resistance at 64,926. That's the 61.8% Fibonacci retracement level. I do expect a retracement or a pullback, at least back to the 38% Fibonacci retracement level. We have a bearish alt-bat pattern which was projected just a few points above the recent highs, so I do expect the lower prices for Bitcoin. Actually, I do expect a violation of this low at some point in the near future. I can be wrong and the market will keep trading higher. There's always the both scenarios possible, but I do expect lower prices for the cryptocurrencies in general, and Bitcoin may also be forced to trade lower. So we have a bearish alt-bat pattern. The golden Fibonacci retracement level exerting now some pressure to the downside on the cryptocurrency. The Bitcoin should target the 38% Fibonacci level. We have an intraday resistance placed at 64.23, so that's the default. That converges, let's say, with the default projection, the 38% Fibonacci retracement level. I will not be surprised to see the Bitcoin being pushed lower from these price levels. That being said, that finishes my video for today. Of course, I will be here during the week to update some of these charts and to bring some new and fresh patterns for you. So I hope you enjoy. I hope to see you in the next video. Have a nice trading week. Stay well.